Westpac raises rates for the fourth time in a month. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. Let's have a look at this article from Yahoo Finance discussing, Westpac raising their rates once again. Target on its back, warning to borrowers as Westpac makes their move. Westpac has hiked some of its variable rates. Only one major bank now offers mortgage rates below 2%, after Westpac ditched its 2-year 1.99% variable rate on Thursday. Previously, borrowers could access Westpac's 1.99% Flexi First option rate for 2 years before the rate reverted to its 2.49% ongoing. Westpac has now increased rates some 4 times this month, after hiking fixed rates on the 16th of November. Now, this seems to be a common story that we're hearing again and again. But you've got to realize these rates that we're having now are just insane. Money is so cheap to borrow. And, we've seen the consequences of that in our housing market, haven't we? Under the most recent changes, Westpac's introductory variable rate will now be 2.19% ongoing for borrowers paying principal and interest with a loan-to-value ratio of up to 70%. The changes mean NAB is now the only major bank offering interest rates below 2%. We can see here NAB, yes, they're the only major under 2%, guys. What's the highest? We have 3.09. That seems to be it for 5 years. There you go. I mean, look at the 4-year ones. 2.89, 2.89, 2.89, 2.74. CAB just raised, I think, their 4-year by 60 basis points. I got a 4-year with CBA for 1.99. Fixed. There you go, everyone. It just shows you the difference now. They've got nothing. Not even anything they're offering at that price. NAB to get you in. Westpac to get you in. So, Westpac first dropped its lowest variable rate to 1.99% just over 3 months ago. And while this sub-2% rate was only ever an introductory one, it played a significant role in driving other variable rates down, Rate City Research Director Sally Tyndall said. However, Tyndall welcomed the change, explaining that simplifying the introductory rate so that it didn't change after 2 years was a necessary move. One competitive ongoing rate is easier for customers to understand and compare, not to mention simpler for the bank to execute, she said. So, and we're talking about the big four. The average new borrower will initially pay more than customers on the old rate, however. If they're still on the same loan after 3 years and 4 months, they will pay less interest in total. Rate City's 66 variable rates under 2% on its platform, although it predicts this number will fall in 2022 as banks prepare for the Reserve Bank of Australia to hike the official interest rate. It's possible a handful of lenders will hold on to a variable rate that starts with a 1 until the RBA makes an official move as a marketing tool, Tyndall said. She also predicts fixed rates will continue to keep rising across 2022 in line with the broader improvement in the global economy. We'll have to see if that continues to play out. We expect the pace at which fixed rates rise will slow in the first few months of 2022. However, it could pick up again as we approach an official cash rate hike here in Australia. Today's record low fixed rate of 1.59% with Greater Bank has a target on its back. It's unlikely to see into 2022. By this time next year, it's possible there may be next to no fixed rate starting with a 1%. So let's have a look at just that change of that introductory rate. So this is what Westpac used to have. They had 1.99%, and then it would jump, was it 2.19 or 2.49? Let's have a look here. Oh, no, 2.49. Okay, so if we'll see the difference with some Excel here. So you're going from a difference of about 147. These are just on dumb numbers. I'm sure your mortgage is going to be lower then as you're paying principal and interest, but still, based on that raw data, that's the difference. You're talking about a $2,140 mortgage there. And if we have a look here, what else? Let's say the highest 3.09%. We'll just put that in here. You're paying $2,473 on the median Australian loan, which is $580,000. Now, there's going to be a lot of people that have that as a loan, but there's also going to be a lot of people that don't, people that are higher. And that's going to impact on, well, their ability to make discretionary spending decisions. Everyone, they're not going to be able to go out there, spend as much money, have as much fun on what's going on in life. I think that's what we'll see. That's how it's going to manifest, guys. That will flow through to retail, and then it's going to be interesting just seeing how the economy goes from there. Well, thanks for watching this episode, guys, and check out this other video asking if borrowers, are they ready for a rate rise? The RBA thinks they are. What do you reckon, guys? Do you think the rate rise will hit them, or will they be shook out of their housing? We'll have to wait and see. Take care.